Greetings. This is Dr. Jeffrey Scott. This is my weekend market update for Friday night, August 22nd, 2025. For those who follow me for some time, I've decided to split up my weekend reviews. I will pay mostly attention to the market and what I'm seeing in the market, maybe some industry group rotation. I'll look at a couple of stocks, but then on Sunday, I'll come back and with my top 5 stocks for the weekend. And typically it's a lot more than 5 stocks that I'll look at. So this is part 1, market review. Again, my name is Jeffrey Scott. My email address is marketmripro@gmail.com. My Google group is called Top Down Trader. And if you have any questions or comments, please put them in the remarks section. Email me directly. If you're new, hit the subscribe, hit the alarm. If you like it, hit the up thumb and see if you can help me get some more people to see my videos show up in their feeds. All right, let's take a look at the market. So let me just tell you the answer to the question. I learned a long time ago that when you have a really amazing positive day, when you're just off all-time highs, it could be a signal that you hit the end of the road. And that is a contrarian to probably what everybody else is saying. But I'm just thinking that next week could be interesting, and I might want to take a lot of profits on Monday. And I'm going to show you what's going on and why I'm saying that. Was today a great day? Oh my God, what a great day. Somehow, with some horrible performance midweek, my portfolio is up on the week because of today. And I'm sure most of yours were as well. So it was an incredible day, but was it too incredible? This is for educational purposes only. Any recommendations I make are to be considered in the spirit of education and not investment advice. The main reason I do these videos is so I can demonstrate how I use my tools for top-down trading and analysis. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in this report, and trading stocks and options should be considered risky, and you should always consult with your financial advisors. I have tools in a number of platforms, and for those of you who are looking for my wealth charts video, this is not it. That will be on the stocksanddocs.com website Monday before the market opens. This will be in my own tool called Market MRI Pro. Speaking of my own tool and my Market MRI Pro, I have a live meeting. I don't always do them. It's been probably a couple of years since the last time I did one in Florida. I am holding it October 26th and 27th, Sunday and Monday. I messed up the dates before, so I hope I haven't confused anybody. But that way, Sunday, we could talk about philosophy and signals and what's behind them and what am I doing and what am I looking for. And maybe Monday, we'll have an opportunity besides continuing the education to actually look at stuff in the market. I like that. And plus, my buddy, John Person, who is a great trader, he manages money, invented indicators. He's one of the few named educator indicators inside Thinkorswim. Super duper guy. He has his seminar October 24th and 25th. So you can go to 2 meetings on one flight. Um, our locations are within a mile of each other. Separate fee, but why not do both? I'll be at John's meeting on Saturday and Friday. I've got a presentation in my healthcare field in New York City. My meeting costs $12.50. It includes breakfast and lunch both days. On Sunday night, I'll take you out for a dinner cruise on my yacht, Stocks and Docks. On Monday after hours, we'll see if there's interest to do something more casual. The hotel is a Marriott full service, and I've got for another few weeks, a price of $155 a night. If you are interested, you email me at marketmripro@gmail.com. I will reserve a seat for you, send you a payment link, and once payment is received, you'll be confirmed, and I'll give you the codes to get the discount on the hotel rooms. I will give anybody who attends that meeting a essentially a virtual discount coupon that can be used on any of the tools whose pricing I control. Those are things such as my trading view indicator set, my Market MRI Pro, my TradeStation market app, and if I can make it any kind of consideration on the Metastock tool when it comes out, that one as well. I don't have much pricing flexibility on the Wealth Charts app. My Google group is called Top Down Trader. I welcome you to join me there. All you got to do is sign into Google Groups, go to all, look for Top Down Trader, let me know how you want me to contact you. If you do that, you get another $100 discount if you buy any of my tools. You'll get a number of educational events and videos that I don't do to a wider audience. Um, I did one where I showed how I had my performance of my account in the first 6 months. I showed my brokerage website with the numbers live, and I didn't really put that out on YouTube. I kept that within the Top Down Trader group as an example of things that I will limit where I share. I always like to look at the yield curve. Um, the 10-year minus 3 months, when it goes below the black line, it's when it's inverted. It's been bouncing around up and down above that line. It's currently minus 0.01. That happens, we'll revisit it. The key here is that recessions, the gray bars, have occurred after every break of that black line. They just don't occur right away. Here is the 10-year minus 2 years. We are well above it. But again, every time you cross below, going back to the 80s, and cross back above, you start the clock till you get a recession. And it looks like at some point, this would be the first time we don't get a recession if that holds true. And I learned a long time ago, it's never different this time. So it would not surprise me at all to see a little recession come in before too long. Now, my guess is it's probably not going to happen until maybe next year, um, when the impact of the tariffs are there, the economy slows down, we'll see what happens. Down below, we look for evidence of credit tightness. It can precede a recession, certainly occurs in one, and you can see we have nothing going on in that respect. And over here, we have the Philadelphia Fed Diffusion Index, which took a dump into negativity this past week, dropping to minus zero point 0.3. Typically, the recessions occur from a minus 20, and we're nowhere close to that. I like to watch those because eventually we're going to get a recession. And if I could see the signals prior to that occurring, I will know that I might want to do some portfolio management to avoid taking the big dive on my portfolio. You need to know your news and earnings, and there's a lot of stuff happening this week. We got new home sales, we got some Fed heads. Now, I think the market overreacted today. I loved it because I was still too long before this pullback. But will they talk back Powell's comments? We got durable goods and a Case-Shiller on Tuesday, and then we've got consumer confidence. On Wednesday, we have nothing. On Thursday, jobless claims, revision of Q2 GDP, home sales, and another Fed head. And then look what comes Friday. Probably the most important of the Fed's inflation gauges to give them a sense of what's going on. And I think a couple things will be really market moving this week, potentially. One's going to be the PCE complex. If this comes in hot, it probably undoes the exuberance from Powell's speech. If it comes in cold, let's hope it's just a little bit below expectations and it juices the market because it reinforces the cuts. Too cold would be concerning. Too hot would be concerning. What else happens on Wednesday? Oh yeah, Nvidia. Like 8%, I think I heard of the S&P 500, one of the most concentrated of all time positions. And you see what it's got coming? It's got earnings. So even though the volume of earnings seems to have dropped a little bit, this is a huge week for earnings when you've got NVIDIA, HP, Viva Software, OKTA, and MongoDB. You've got some more banks left. And you got things over here like Best Buy and Dell, Ollie's, Dick's Sporting Goods, Gap, Affirm, Ambarella. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. The index, E-index, I gave it up for dead, but I also noted that it had a hammer and then a doji on the chandelier stop, not truly breaking it. And then what happened on Friday? A 3% move up, a kahuna, which is a sign of exuberance, a eureka occurred in the market, which is a sign of exuberance, and it's coming out of a squeeze. God, I'm not used to an E-index reversing after it's broken down. That is shocking. You want to be concerned? I only showed you a little bit of data, but if I showed you 10 years of data, I could map this out. When we hit this line, the markets sell off. We hit this line, sometimes it's just a little sell off. Hit the line, another one sold off. We are at all-time highs, essentially, within spitting distance, and we have topped it, the 21-21, which is the 13-week new high, new low ratio. I don't think I've ever seen the market continue to go higher right away after I've top ticked it. If we're lucky, we get something where you get a little bit of a pause and it goes higher, or it just goes sideways for a while and the market creeps higher. But that is worrisome. And talk about market exuberance. I call it old school, but Edge Rater is not an old school tool. Edge Rater is it's an outstanding product that has a whole bunch of tricks in it. And one that I used to always use to gauge the markets was their market tool, your US markets tool. And what I wanted to show you is that all the indexes, spiders, the Dow, the Qs, the Russell, the SP 100, the 1500, the NASDAQ, and the NYSE all had kahunas today. Kahunas are big moves. They occur, but look at the last time they all occurred on the same day. It was April 9th. What was April 9th? That was the reversal day in the market. Now, um, we had all reds in July and early August, and that started a few weeks of challenging markets. Um, the bull would say, we're going higher and this is incredibly bullish. I'm just worried when I see that 13-week new high, new low, that we're having exuberance at the top. And as one of my many mentors and the one I have give the most thanks to, Ian Woodward, taught us, exuberance signals like eurekas, which I'll introduce to you shortly, and kahunas at the top might signal that the market is perhaps in a climax run or goes into a climax run and it's near the end of the run. Just something to be aware of. For more information about any tech issues related to the software, coding at Market MRI Pro.com, If you want to order it, if you have questions about it, if you just want to ask me about something, um, marketmripro@gmail.com. Join my top-down trader and love to see you there. And I hope to see people in Florida. Now, this is not the hotel we're going to because it's about $500 a night, and I know most of my followers aren't going to want to pay that. However, if you're bringing your spouse, your significant other, your side, whatever, you might want to stay at this hotel. It's called the Singer Island Marriott. It is maybe 3 or 4 miles from the Marriott that we're having the meeting. The beach is awesome. I know that beach well because I used to live next door to the Marriott, 2 or 3 doors down. It was amazing. All right, Market MRI Pro. This is the daily briefing, and look at the performance. Bitcoin was up 4% today. It almost got back to even on the week after a horrible period for Bitcoin. Russell, 3.91% in one day. Diamonds, 1.94. Qs, 1.54. Spiders, 1.53. Dollar down 1%, and the VIX was down over 8 as the VXX. When we look at the closing area of those indices, they closed almost all near the top of the range. At the bottom, where you want them to be, volatility. If you want the dollar week, the dollar. If you look at 5-day ranges, great week for Bitcoin, except the vast majority of it, 80% of it was on Friday. But the Russell had such a strong day on Friday, it turned the week around, 3.62. The diamonds, 1.68 for 5 days, 1.9 on the Qs, 1.45 on the spiders. What a week. If you want to look at the 52-week new highs minus new lows on the NYSE and the NASDAQ, you could see triple digits. Haven't seen that for a couple of days. You could see almost no new lows. How bizarre. That doesn't happen often. And just a massive preponderance of new highs. If we look at what was the winners today, well, you can see only one thing was flat, and that was staples. Utilities and healthcare lagged, although those two were positive, and those are more defensive plays. Surprisingly, tech was only up 0.82. On the week, it was up 1.44. The big winners was discretionary, energy, materials, financials, and industrials all up over 1% on the day, as well as real estate, communications, and tech. Just a super, super strong day, massive day. 3% on discretionary, 2% on energy. Over here, we could see all the sectors were up, whether I'm looking at S&P 1500, NASDAQ Composite, or the NYSE. The majority of industry groups were up. And more importantly, the majority of stocks, 91% in the S&P 1500, 82% in the NASDAQ, and 88% in the NYSE. If you were down today and it wasn't because you were short or in contra ETFs, it'd be interesting to know what stocks you were holding because the vast majority of the market was higher. So this really juiced all the timing models. If you look at the Spider Daily, look at these candles. They're beautiful. They're closed at the top of the day and look at the right off the WMA. So except for the Qs, which have not flipped their bongos, we are in a green buy on the daily timing model on the spiders, the Russell, and the diamonds. Only the Q is still questionable and it's mixed because the price is above the WMA, but that's still negative. If I look at the weeklies, it'll come up in a second. Wake it up. The weeklies are all in a buy. So again, we remain in that weekly says to be long. There was one dissenting vote of 4 on the daily saying maybe not so much. There were 2 before today's market saying not so much. Still a pullback in an uptrend. And As I've been saying, despite the fact that I've raised cash and I've got concerns about the market, still says to be long this market. Hence, I've not been looking at contra ETFs the last couple of days. I've been not short, but I like to raise cash into new highs because eventually we always come back and then you can buy things cheaper. So right now the markets look much better. If we look at the index ETFs, um, my concern was would we pull back to the 50? But as I talked about the pullback to the 50, I knew I'd do that again. I commented that um, it wasn't my expectation that we were going to drop down and have a big correction here, that I thought we might pull back a little bit more and then run up and test new highs. Well, I don't think we set a new high necessarily today on the spiders. I think we got very close. Um, no, maybe we did. Let's pop it open. And I popped open the wrong one. I got to highlight the one I want. I got fooled by that white line. Pop it up and let's see. Looks like intraday. Let's see the high on this bar. We'll look over at the left. The high was 646.50. The high was 646.09. Nowhere close. And 6. So we had an intraday all-time high. And on the close, we closed at 646.30, 644.95. Looks like we may have had an all-time closing high here as well. Let me just put the line on that and look at it. Yep. So what a day. How do you be bearish on a day like that? That's a fair question. Like I said, I might be a little contrarian today in my thoughts. But look, when you look at the news and those Fed heads, I think that's even more reason. Volume today was 25% above it of average, so strong volume today. You look at the Qs, not quite as powerful a day, up 1.54, equal powerful pretty much as the spider, which was 1.53, but not getting up to the prior highs. Nice bounce though. Diamonds, all-time highs. Let's make sure. Let's make a bigger chart. And let's put the horizontal line on at the high here. And I don't think we're anywhere close. Definite all-time highs. And remember, as you can see here on the seasonality, that's been one of the concerns as we're going into a period of often weaker seasonality. But what can you say but wow? So new highs on the spiders, new highs on the diamonds. All right. Um, I don't have anything else to say. I mean, it's a super powerful market move, but maybe too powerful. And even the Russell, the laggard of all laggards, a powerful breakout on high volume. It had a momentum, a breakout volume, and a CPR signal took out this trend line. And again, it's not all-time highs. It's got to get back to here. But what a powerful move. So I think the indexes look amazing and maybe too amazing. You'd expect volatility to be down, and you could see a big, gapped up higher and closed much lower, down 14% on the VIX futures today. I'd say that's down. And if we look at the dollar, let me bring it up here. The dollar had a pretty significant reversal today too, and was down almost 1%. And again, look at this, a CPR sell, volume to the downside, breakdown, momentum to the downside, a red candle high, reversal candle, just weakness on the dollar. So indexes don't look bad, they look great. You'll see my concerns coming, and it doesn't mean I'm selling off. It just means I've raised a little cash and I might take off some more on Monday, especially if the market continues higher. Commodities. Wow. Dollar down, gold up over 1%. Really a bullish engulfing pattern. Will this go back and retest highs? Silver looks even better, up 2%. Beautiful, beautiful candle. Oil creeping higher, the weaker dollar helps, and you can see oil was up 0.69. Natural gas is still dead to me. And then another thing, if you like to see if you're bullish, is you can see the 10-year was down 1.6%, and the 30-year down here was down point. Oh, I hate when I do that. My mouse is so sensitive, but you can see that the 30-year was also down, although it's got a little bit of a bounce here at the 50. So, what's not to like for the bulls? All right, now's the time to make the case. Besides the 2121 bucket briefing, massive shift to the left. Now, 10% of the stocks in the Nasdaq are above the Bollinger Band, 16 in the Russell 2000, 13 in the S&P 1500, and 12% in the NYSE. Um, those numbers by themselves are not dangerous, and they're not screaming at me, we're going down, we're going down. But another day or two um, with strong markets, and we're going to be at that, like the 2121, where you expect a reversal. How about the market breadth? All-time highs on the NYSE, not all-time highs yet on the NASDAQ. You could see the stocks above the 17, above the 20 now are at 70%, above the 50 are 65, and the 200 are 59. Not to the point where you have a guaranteed reversal, but it's getting closer. And over here on the NASDAQ, you're looking at 63, 57, and 50. So we're starting to get extended. If you look over here, you can see positive new high, new lows, advanced decline, very positive. One of the bigger lines we've seen. Up down volume, very positive. And I'd like you to introduce my friend here. It's called the Eureka and a Bango. The Bango is a sign of exuberance for the bulls. And the Eureka is, well, typically you want to see it at a market bottom, because when you see a Eureka at the bottom, it's a good sign that the market is probably going to reverse and go higher. Um, but when you see a Eureka at the top, it's the sign of too much exuberance. That has me worried, because I've got Eureka at what I believe is an all-time high on the NYSE. I know I'm looking. It's an all-time high in the NYSE. I also got the Eureka on the NASDAQ. If I go into my broader market breadth tool, look at my 13-week new high, new low. It's at 99th percentile. It's as high as it gets on the spider, on the S&P 1500, on the Russell 2000 down here, and it's zero point 0.9 on the NASDAQ. I've been doing this a long time. I've been trading for 30 years. I think that this was a irrational, exuberant day. It's still stagflation. Stagflation is not great for the markets. We still have a lot of news before a rate cut. We have Fed heads have been talked down what Powell said. I think by the time the PCE gets here, if this market hasn't rolled over, I'm going to have more cash and less positions. I'm overbought right now, so it's not necessarily a bad thing. I'm a little bit concerned. I think the Nasdaq, broader Nasdaq, the AD line, it's turned up, but it's well off the highs, and the Nasdaq's about to set highs again if it goes any higher. A little bit of a divergence there. I think this market is at risk, and love to hear comments and the arguments against it. I think this is a great forum to have contrarian opinions. I'm not usually a contrarian. I'm concerned. I love today. Don't get me wrong. I made a ton of money, as did you. I just a little bit nervous. Maybe it was too easy. All right, let's look at the ratio charts, which gives me a sense of performance versus the spider. You can see the long white line on Bitcoin had a strong day. Energy is turned up. Materials turned up significantly. Communications has come off its highs, but it's holding up. Financials improved versus the spider. Real estate improved. What didn't? Technology is showing some weakness here. Healthcare has had a nice improvement pull back. There's discretionary strong, and defensive plays as staples and utilities don't look great. And industrials is sort of intermediate. Now, although I just spent all that time on the market, so my market review, I'm supposed to do that. I thought I'd quickly look at um, some of the stocks that I thought were interesting. And I'll go through the more top-down analysis aspect on my Sunday video before I get you my top picks. My favorite tool that I built into this is a 2 days momentum up. Let's throw a $5 filter, a 500,000 shares, a 200-day moving average, and the weekly trend is up. And let's see what we have. I get these will be some of my favorite places to find stocks if I want to go long. AMLX, I love the picture. Beautiful uptrend, sideways move, and a breakout from a consolidated area today. I like that, and this will be one that I might be talking about on Sunday. It had good volume, breakout momentum. It's coming out of a squeeze. It is not too extended to buy. Its relative strength versus the spider took off above the moving average, broke out today, as did its OBV. I like the pattern, and the signal that we're looking for is these momentum dots. When I get two in a row, I get excited. And you can see the last time we had a bunch of these momentum dots fire was a gap up and off to the races. Let's look up here for earnings date. It was August 7th. Good growth. Revenue, I don't have much reported here. Um, Fundamentals don't look so hot. However, I don't know if it's generics or branded pharmaceuticals. It's a healthcare stock, a drug stock, and we know healthcare has picked up. You want to read the earnings calls in my program, you just hit the button and we'll pull it up for you. Made it easy to know what's going on. A high risk pipeline with strong upside potential. Might be worth reading that. The next one, interestingly, an energy stock made it, Chevron. Earnings were on the first, makes a ton of money, pays a 4.5% dividend. Um, not much growth in earnings or revenue. Had surprises in both on the last quarter. Um, why is it here? Because coming out of the squeeze, I've got my two momentum dots. Um, this is the kind of thing that I like dividends. If it takes out that line, it might be worth looking at. LYTS, LSI Industries, was on our scan yesterday, on one of our scans. I remember talking about it, but I didn't like how it closed. What broke out today? Looks pretty interesting. Nordson, another thing with two dots in a row. Look at the relative strength in OBV. And again, similar to the last one, it failed to break out, closed at the end after a gap, but it kept going today. SU, another energy stock, Sunoco Energy. Goldman Sachs loves three Great White North high yield energy stocks. Okay, I like yield over 4%. You got to highlight it if it's got the dots, it'll tell you 4.28%. And again, it's an energy stock. It's not fancy in growth. It's got persistent earnings. And this is one where I might have and say, boy, if it breaks out above that on Monday, maybe that's interesting. We talked about this one on last night. This is one that now has three dots, but last night it had two. A fresh breakup. Now it's kind of looks like it's getting extended. The high jumps 100. It's a long way from the 200, and that might concern me. Earnings, it's a Chinese company, and we don't have any recent earnings. The last one was 5:30. It might be coming up this week. I would not buy it in front of earnings, and if I owned it, I'd be looking and seeing UMAC, Unusual Machines. I think these are robots or something. Artificial intelligence powered defense and security solutions. Drone components. Oh, those are big right now. Um, just look at what happened with Israel, Iran, and the Middle East, and what's going on with Ukraine and Russia. Oh, close that down. Let's look at the earnings picture. It doesn't make money. Earnings are not to November. Um, Growths have been hot, and what we see here is a uptrend, a pullback to the 50, and a breakout, a pattern that I like. So I think there's a number of interesting things here, and maybe my favorite's going to be this one, which I currently own. Uranium has been hot. It's been one of the leading groups, and this thing took a quick dive. But if you look at data center energy needs, the small nuclear reactors, the whole thing with rare earth metals, I think UUUU still looks really good here, breaking out, and earnings are not to October. So there's my market review, a few stocks, and I'll be back Sunday with my favorites. And if you think I'm nuts and too contrarian, let me know. But that 2121 doesn't lie. Have an awesome weekend, everybody. I'll see you Sunday.